We'll be live in just a second, folks. All right. Let's get this party started, right? Share this. We're going to share that. And we're going to go live. There we go. All right. Going to have a big room today. Look at the spy here. Good morning, everybody. Good morning, and good morning. Let me just say hello to everybody and we'll begin. Hope everybody is doing great. Hope that you guys can all hear me. And in a minute, you guys will be able to see me. There I am. David, good morning. JB, good morning. Ali, Steve, good morning. Omar, Bill, Robert, Peter, good morning, Peter. Hope you got my email from yesterday. Vernon, Eduardo, David, Ivano, Lydia, Ben, Steve, Jody, Eagle Beagle. Good morning to you, Eagle Beagle. Hope everything's good. Clay, James, Devin, Tim, Pete, Jody, Dave, Murray. Good morning, Murray. Deanna, good morning. Christopher, good morning. Brian, John, Dave, Jill, Keith, Garen, Gustavo. Good morning, Gustavo. Hope you had a good weekend. Graham, a different Graham, not Gramster, a different Graham. Mary, Doug, Christian, Ed, Wayne, Samson, Kevin. Good morning, Kevin. Sherman. Haven't seen you in a while, Sherman. Hope you're well. Beam Clay, Carlos. Carlos, hope you had a good weekend. Joanne, Stacy, Eric, Afshin, Cam. Good morning, Cam. Kirk. Good morning. Good morning, everybody. Good morning. We'll be starting in just a minute. Art, George, Piet de Brock from Netherlands is joining us. How exciting. Omar, Ronaldo, Nathan, good morning. Bat storms in the southeast. Ooh, yeah, they are pretty bad storms. Flying Ronan is in the house. Charlie Clyde. Where's Clyde? I'm missing my... There he is. Delroy, Richard, good morning. Brian, good morning. I hope you had a restful weekend from all the crap that Matt and I made you do last couple weeks. Brian, thank you big time. Get some rest. And let me know how those new shoes are working out for you. I was actually wearing them all weekend. Rice, Colleen, Scotty, Kyung, Michael, Ruth, Kevin, Keyhawk fan, Mark, Dave, Rick, sorry, Henry, Robert, Dr. Serena. I hope you're doing better this morning. Duzzy, Dom, Rebecca, Steve, Rochelle, Karen, Harold, Walter. We got a full house today. Mitch, Walter, Harold, Illinois grain farmer, sassy trainer, Richard, Delbert Murray. No, Matt is on this week. He's going to be at work. He's got to help me. Lawrence, Yvonne, he already had last week off. Stephen, Darren, 250 people in 300 minutes. I will take that. By the way, Kane is going to be coming in about 40 minutes to talk about his view of the market. I always like to get a perspective from folks. And let me just pull up my viewer here so we can start looking at things. It was a nice weekend. Got a chance to relax. My first weekend off in 2 weeks. It was very nice, actually. What is not nice is the fact that the Nasdaq is down 300 points. And that beautiful chart that I showed you, my Picasso drawing is finally finished. Do you guys remember my Picasso drawing from the 19th? That was so basically I was able to predict the market with a 100% certainty over the last 10 days. There it is. And for those that don't have an idea what the hell I'm talking about, here it is. Here's my Picasso drawing. This is from the 19th. I drew this from the 19th for you. That's the 200-day moving average. That's the arrow. That's going down. This was drawn on the 19th. You all remember that really, really well. And here we are. Look, the QQQ, look at how well it respected the 200-day moving average, couldn't break through, and now we're broken below. We have broken our structure to the downside. I'm going to ask you guys an interesting question. 2 months ago, I was talking a lot of nasty stuff about tariffs and how all of these things were going to happen. And a lot of you, I would say maybe a third of you, were arguing with me about it. Anybody else want to argue with me about it? Or are we all good now? Anybody else want to argue and give me your perspective? Or are we all good now? Everybody's happy. Everybody's kosher. Everybody understands what's what. Nobody's going to argue with me. Or do we still have people who want to argue with me? Van Gogh, yeah. Just want to know, does anybody still want to argue with me about the tariffs, the impact of tariffs, all your ideas about what you thought was going to happen? Does anybody have any more ideas, or are we good? We can now move on since it's been permeated throughout the market to a point where I can't even begin. Okay, good. Thank you. Next time you guys want to argue with me, think about what happened the last 3 months. Just think about what I've been telling you and think about what's been going on. Next time you want to argue with me, let's just put that in perspective, okay? All right, let's begin. Interesting how nobody wants to argue with me anymore. But 2 months ago, everybody wanted to argue with me. No, you can't beat physics, can you? No. Matt should have more time off. Pat Pierce, I'm glad you think so, but I don't think most people... do you want me to have a more difficult time? I don't think so. But I'm glad you think so. I'm glad you think so, Pat. He's had a week off. I mean, you know, Dana, I'm pretty sure Matt can't wait to get back to work. Good morning, Dana. I hope you're well. All right, let me give you guys a few links, and then we will begin. Cam, you remember how everybody was arguing with me? How everybody was arguing with me, hand over fist. Everybody was arguing with me what was going to happen, your theories about negotiations and all that crap, and how did it all work out? All right, let me give you guys CTAs. Next time, if you feel like you want to argue, go argue with some other guru. Don't argue with me. All right. So, folks, tomorrow we have a big day. I'm going to do a class with Geof Smith. Now, I don't know if you guys know this or not, but if I argue with you, it's a recession fear, not tariffs. Oh, good. The kid bike has 2 flat tires. Yeah, the kid's bike is hidden now. He can't even get, he's not even riding it because he knows his parents are going to take it from him and steal it. Thank you, Bob. Thank you. Okay, and join me in my VIP room at noon today. Now, I'm going to tell you guys something about Geof Smith. Geof is a trader. He's not a guru. So he doesn't come off as shiny, as polished as a lot of folks out there. But Geof knows commodities and futures probably better than most folks out there I know. So he's not a big sales guy. He's a real trader. Most traders are not big, video guys. It took me only about 8 years to get comfortable in front of a camera. So no, it didn't take that long. But anyway, my point is Geof is really, really good when it comes to futures. He's scary good when it comes to futures. And he's going to be talking about things that are related to futures. Not trading futures, but related to market timing futures. So it'll be really, really good. Cam says, I've learned that I'm wrong 95% if I disagree with you. That's usually what people end up telling me over time. Yeah, don't argue with me about politics when it comes to the market because I will always win because I've been doing this for 31 years and I actually know what I'm doing. All right. And I'm actually trying to help you. Okay, Fed data this week. Let's talk about Fed data this week. Potential catalysts. Tomorrow you've got ISM. Okay. Friday you've got the big daddy. You've got the employment report, and the ADP report is going to project on it. Okay. All right. So just so you know, the ADP is going to project, and it's been wrong every time. Okay. We also have JOLTS, job openings. That'll be pretty important. And we have construction spending. We don't have a lot of reports this week, but the reports that we have are very, very instrumental. Eagle says Dodge, Trump have 1 in 10 chance of getting 50% of their mission complete. Recession is looming. Eagle, I would say more like 5% chance, maybe 10% chance. And that's the best case scenario. And recession is looming. Yes, and recession is looming. Yes, and please don't argue with me. Stop arguing with me. A recession, a big fat recession is looming. Okay? Now, I don't know if it's going to happen, but it's definitely looming. Yeah. You're from Hollywood. Come on, cameras, time come. That's right. That's right. Chicago PMI today at night. I was just about to mention this. Please, no trading till 10 a.m. And what is the market doing overnight? Well, let me show you what the market's doing overnight. The QQQ on a daily broke the low as we expected it to. You'll be able to take profit on that Marvell trade from the pit with a nicer gain if you swung trade it. You're welcome. And we've been pretty much going, we gapped down last night, and we've been going down straight down the entire time. Look at the VWAP. We've been below the VWAP the entire time, overnight. How about SPY? Below the VWAP the entire time. Picasso, the structure is finished. Remember our box? I have not changed this box in a month. Yeah, about a month. Maybe, let's see, 1, 2, 3, 4, 5, 6. Yeah, about a month or so. It's broken down, and the structure is now broken. So now we have a new structure, which we will be dealing today. In the VIP room today at noon, I will be spending a lot of time talking about market structures. And I hope you guys join me so that I can educate you on market structures. And please stop arguing with me. Arguing with me is not helpful. You're going to lose about 95% of the time. Not 100, 95% of the time. Okay. Bond market. What's the bond market doing? Is this a slow grind up right here, folks? Well, I'll talk about Dan. Dan, stop asking the girl to marry you before you find out if she speaks English. Let's warm our way to that. Let's warm our way to that, Dan. Don't jump the boat. We're still talking about Picasso. So, folks, what is this right now? When we get to the Dan, when we get to by the time we get to IWM, you're not going to have to ask me what IWM is going to do because you will see it based on the movie on the picture that I'm drawing for you. And if you try to get ahead of the picture, nothing good is going to happen. So what is this, folks? What is this right here? Bond market. Is bond market going up normally? What do you guys call this? We have a name for this. And it's not called steady climb up. What do we call this right here when the bond market does this over 3 days? Yes, flight to quality. Manuel is right. Thank you, Dr. Serena. I'll talk about Picasso phase 2 during my VIP room today. And if you missed Picasso phase 1, do you guys want to know what will probably happen within the next 10, 20 days? I'm going to be drawing it today in the VIP room. I hope you guys come and don't miss out. That's called flight to quality. It's not called a false breakout. There's nothing here breaking out. We're going back into the meat of the move. Harold, learn your technicals. No, this is not flight to quality. This is flight to quality. This is not a breakout of anything. What are we breaking out here of? Are we breaking above here? Are we breaking down here? No, this is flight to quality. This is fearful movement. You see these gaps? Folks, you should not see gaps like this in the bond market unless there's a flight to quality. This is flight to quality. This is panic mode. Panic mode. Panic mode right here. Panic mode. What about gold? What is gold doing? Do you think gold is just rising on its own volition, or do you think folks are taking money out of stocks and putting them into gold and the bond market right now? Red flag, red flag, red flag right here. Defensive market, red flag. Okay, what about gold? I like gold, but the problem is gold isn't going along up along with stocks. Money is being taken out of stocks and put into the gold and the bond market. Okay. What about crude oil? What about crude oil? I told you last time that I thought crude oil was going to get stuck right here. And what happened to crude oil? Did it get stuck? What is the quality that money is flowing into? Bonds and gold, Boyd. Bonds and gold. Flight to quality, bonds and gold. I mean, you could see it as clear as day. This isn't normal bond trading. Bonds don't have a lot of gaps. Gap bonds are the most bonds is the least directional market in the world. It's one of the biggest markets. This is a defines counter trending market. These are not normal moves in the bond market unless there's fear. Okay? Yeah, that's right, Eagle Beagle. So do you capiche, boy? Do you understand? Gold and bonds. Now, remember, I told you crude oil was going to get stuck here. Well, Roger, what made you think that crude oil was going to get stuck here? Well, maybe it's the fact that we have the 200-day moving average, the 100-day moving average, the 50-day moving average, and two VWAPs above us. And we're stuck in the VWAP from the quadruple witching right here. So do you understand why and how I use these levels? And you should too. They're valuable. They tell you what they give you a market structure. Okay. All right. So energy stuck, and I think energies are going to be coming down. I don't think anybody's buying energy right now with what's happening right now. And by the way, if energy prices go down while the markets are going down, that's a recessionary sign. Because there's no need for energy if the markets are going down. Remember what dropped the most during COVID? Energy. So if energy is going up, now I'm going to say something right now, and I want you to write it down. If energy prices are going up while bonds are going up, that's okay. That's inflationary. That's inflationary. But if the stock market and everything else is coming straight down and energy's coming down, mm-mm. That's recessionary. If energy starts coming down and yield and bond yield is going up, that or down, that's recessionary. If there's no demand for energy, even when yield is going lower, that's recessionary. Is what I'm telling you a 31-year experience thing? No, it's basic economics 101 that you could find in your first semester economics class. When energy prices are going down and economy is getting worse, that's recessionary. Does anybody want to argue with me again? You guys love to argue with me. Got it. I was thinking quality. No, Boyd, no. A few, and I'll talk about that, Boyd. Coca-Cola, McDonald's. I'll talk about a couple. I have them actually on my list here. I'll talk, but the type of stocks that are going up are just confirming everything I'm saying. All right. Bond market is 1,000 times bigger than the stock market. 1,000 times bigger than the stock market. The bond market is 1,000 times bigger than the stock market. Just so you guys know. And the currency market is 100 times bigger than the bond market. Currency, bonds, stocks. Currencies, bonds, stocks. And if you've ever read the first Market Wizards book or the second one, you would know that because he starts off with that. But most of you have not. No argument, butter, and better knowledge. All right. Hey, Richard, one of the Middle East oil producers stated they will increase oil production. I forget which country. It doesn't really matter. Increased oil production. Yeah. Yeah. Increased oil production still shouldn't cause oil to start really falling down. It hasn't done it yet, but if this starts falling down, that's recessionary. All right. China. What's China doing? Breaking down. Not good for our Bidus and Babas and all that. We're almost at this level. If we break this level, which is right at the 50-day moving average, 34.76, we're going to start getting choppy. What's the ticket of that chart in TradingView? I don't use TradingView, Tiago. You mean this chart in TC 2000? Can you see it right here? Can you see the ticker symbol here, Tiago? Oh, crude oil. Sorry. This is not TC 2000. It's bar chart here. You can replicate this chart for yourself if you want. Look, it's bar chart. It's futures. Here you go, buddy. Here, you can copy it. I just posted it for you. You like that, huh? Carlos, isn't it funny how people wouldn't let me talk 2 months ago? And everybody told me I didn't know what I was talking about. And it was just a negotiation ploy and all this crap. And I was telling you, no, 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 no. No, 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 it's not. And guess what? It's not. All right. All right. All right. US dollar. What's the US dollar doing? Folks, US dollar's coming back down. Folks, bonds, interest rates are getting weaker, 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 and US dollar is going down. How do we know this is flight to quality? Because because US dollar should be falling down with bonds doing this, and they're not. They're not falling down. So US dollar is still holding on, but this is the structure right now that we have with the US dollar. Remember, bond yield, the stronger the bond yield, the stronger the dollar, right? Bonds going up, right? Bonds going up, US dollar going weaker. Because remember, yield gets weaker, yield gets lower yield. Lower yield is bad for the bond market. But we're not seeing any of that yet. Volatility. What is volatility doing? Oh. Remember I told you on Friday, watch the 20 level? I did. Oh, I know you agreed with me, Rochelle. I know you always agree. Leon is the one we got to watch out for. Wink, wink. I'm just kidding around. All right, folks, remember, I'll be on with Geof tomorrow. Here's the link. We have VIP room today at noon. And let me get you a link to Customer Service Live. I don't think I've done that yet. Don't forget, Cam, what's on the agenda today? What's on the agenda today, Cam? Talk to me. Got some juicy stuff on the table today? I'm not using TradingView, guys. I'm not using trading. Just so you know, I'm not using TradingView. I'm using a free program that you can all use with me at the same time if you wanted to. Or you could use TradingView. It's fine too. I like TradingView. Yes, volatility. But remember, I told you the key level is going to be right here, 1999 or 20. That's going to be the key level. All right. More day trading stuff. Yay. Good. Yeah, and if you ever need any tickers, Tiago, just email me and I'll give you tickers. Roger@rogerscott.com. That's a good reason to email me. Gustavo, I hope you had a good weekend. There were some nice dobies around my area. I was playing with this weekend. Maybe, I want a dobie or a German Shepherd so bad. Maybe in the future. All right, let's talk about the market. Let's talk about fundamentals, and then we'll get into technicals, shall we? The market's down over 1%. Anytime the market's down over 1%, that's not random. The E-mini futures on the NASDAQ are down 1.25%. As risk sentiment took a hit ahead of U.S. President Trump's deadline for a new round of comprehensive global trade tariffs. Trump on Sunday stated that reciprocal tariffs would initially target essentially all countries and reportedly urged his advisors to adopt a more aggressive approach. That's all we need right now. A recently announced 25% tariffs on auto imports is set to take effect at midnight on April 3rd. That's a few days from now. Investors are becoming increasingly worried about the impact on these tariffs on U.S. and global economy, as we all know. Wow, Gustavo, happy birthday to your dad. And your son got married. Wow, Gustavo, big congratulations. Big congratulations, Gustavo. That's big. That's big. Big, 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 big. Big, big, big. Congratulations, man. To your dad and your son. That's huge. Huge. That's worth celebrating, Gustavo. I don't know. If I had that, I may actually take a drink. I haven't drank in 13 years. If my son and my dad got married and my dad was 100, I'd probably have a drink. That's fantastic, Gustavo. Yeah, can you show us some post some pictures in the chat if you get a chance, okay? Love to see some pictures. I don't have to repost them. I just want to see pictures. You must have had a fantastic weekend. Fantastic weekend. Wow, we already have 538 people here. I love it. And remember, Kane will be here in about 15 minutes. So Friday's Wall Street equities closed lower. Lulu 14% dump. Magnificent Seven were not very magnificent. Tesla's down 6% this morning. We have a weekly cash flow call trade on it. We'll probably take some profit on it if I had to guess. I don't know. We'll see what happens after the market opens. U.S. Department of Commerce Friday showed core PCE came in stronger than expected. February personal income was okay. University of Michigan consumer sentiment was revised to a 2 1/3 year low, folks. And consumer confidence is at a 4 year low right now. Is at a 4 year low right now. Okay. Mary Daly stated on Friday the central bank could afford to wait and see the impact of tariffs. You think? No. Now let me ask you, Mary, why weren't you saying that 3 months ago? Why weren't you saying that 3 months ago? Nothing changed. And still views 225 base point interest rates as reasonable. Well, your two went from 5 to 2, but you're not saying that, are you? You don't want to be called a liar here, but 3 months ago you were saying 5 cuts this year, and you were saying it's more than appropriate. You see, Mary, one thing I have is I have a photographic memory, and I remember every little word you said. And this is not what you were saying 3 months ago. And you knew that Trump was going to pull this because you said we don't know what to project because we don't know what the tariffs were going to be. But nonetheless, you lowered rates twice, Mary. Yes, that's right. Congrats, Eagle Beagle. They're not exempt from tariffs. All right. Meanwhile, futures have priced in 83% of no rate change. It's more like 100%. Non-farm payroll will be the main event. That's this report right here. This is going to be the big, 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 big report. We're going to be looking at unemployment rate. We're going to be looking at unemployment rate right here. We're going to be looking at average hourly earnings right here. We're looking at annual numbers. We're not looking at monthly numbers. Monthly numbers don't mean anything. That's right, Brian. That's what I'm thinking. Let's continue. Yeah, so a lot of earnings, a lot of news, not a lot of earnings, a lot of earnings, but yeah, non-farm payroll is going to be the big report, and also right here, the ISM and the PMI. These are going to right here. These two right here, PMI manufacturing, ISM manufacturing, and these two right here. That's also going to be important, including today's PMI. You impress me with a lot of stuff. Teach me, but your memory just don't know how you do it. I was born with a gifted memory. My college teachers didn't know how I did it either. I would memorize. They would give us like 20 pages to memorize, and I would memorize the entire 20 pages and answer the question with quoting their comments, and they would always think I was cheating because I literally would write their. Yeah, I did well in school. Conagra. I had when I was in law school, folks. We had a total of 14 classes in the 4 year program I was in. I amjured 5 of those 14 classes, which means I got the highest grade in the class in 5 out of 14 classes. My mom still has those things on the wall, those Amjur awards, American Jurisprudence Awards. I still have them on my wall. Well, she has them on my wall. I don't have them on my wall. Yeah. Conagra Brands, Lamb Weston, Guess, PVH, RH. Conagra Brands, consumer discretion, consumer staples, consumer discretionary, consumer discretionary. On their own, these are not important reports, but these are pretty important reports. You are a survivor, Rochelle. There you go. All right. U.S. Chicago PMI is set to be released. This is pretty important. Europe. Is Europe giving us any tailwind? No. Europe is down 1%, tracking a sell-off in Asia. Asia didn't give us any help either. They brace for a fresh round of U.S. tariffs. New reciprocal tariffs on U.S. imports are scheduled to take effect on Wednesday, heightening concerns over global economic slowdown. Global. Bonds, flight to quality, global. You understand? Not U.S., global. No, I'm not dyslexic. No. I do use Hims shampoo, though. No, but I do have a photographic memory. I do. I almost photographic. I'll tell you something funny about my memory. I have a relevancy problem, though. My mind, without me, decides what's important and what's not. I can't tell myself this is important, this is not. So certain things that my mind does not deem important, I have no recollection of. And if my mind thinks it's important, it has complete recollection of. So I can't choose what I remember. It depends on what my mind decides is important at any given time. So it doesn't always work the way I want to. Like, for example, if I meet somebody and they're not super important to me, I will not remember their name, even if my wife tells me what their name is 1,000 times. But if there's a quote and my mind thinks it's important, I'll remember it 100. I'll remember it forever. So it's whatever my mind deems is relevant, and I can't decide that. It's something that happens subconsciously. That's the best way I can explain it to you guys. You got the same thing, huh? That's what it's called. I have that. Yeah, you have that too, huh? Missing memory chips. Nobody uses Polaroid. So we're not getting any help from Europe, and that's important over the weekend because remember, they start dissecting the data ahead of us. China closed lower as concerns over U.S. President Trump's reciprocal tariffs. Notice they don't say U.S. tariffs. They say U.S. President Donald Trump's reciprocal tariffs. I think that's so funny. Overshadowed strong PMI. Property and consumer stocks led the decline. That's very, very bad. Japan closed sharply lower, plummeting to its lowest level in nearly 8 months as worries about U.S. tariffs resurface. Chips and financials, folks. What do I always tell you? What are the two sectors we need to have a rally in the U.S. stock market? Richard knows this answer really, really well. If I have it, I've never been diagnosed with it, Rice. But maybe I'll check. I'll check. But I've never been diagnosed with it. Um, Nikkei closed sharply lower, plummeting to its lowest level in nearly 8 months. So this is the problem. You see, chip and financial stocks led the decline. You see that? Tech and financials. It's very hard without getting a rally. Folks, as a general rule, nothing to do with what I'm talking about right now. Tech, not chips, but tech and financials, it's very, very difficult. It's almost impossible for the stock market to generate continuous upside momentum and break out to new highs if financials and technology are not participating. Those are the biggest and the strongest sectors, and it's very difficult for the market to go higher if those two, particularly those, not chips, technology. So chips are within technology. And usually it's chips and financials, but financials and technology are the ones that cause those big, big moves. Exactly. Not mags, just technology. Doesn't have to be mags, Nathan, but yeah, usually that's that. Yeah. Max 7. Speaking of Nathan, Max 7, timing is good. Tesla was down over 6% when I checked this morning. Let's see. Let's see what Tesla's doing right now. Tesla's down 6% right now. I'll be able to get rid of my options. We wrote options right here, calls on Friday. I don't know what Lance is doing right now with Tesla. I hope he's shorting Tesla, but you guys remember what I've been telling you now for quite some time. Again, I don't follow Lance, but I know he has a Tesla program. All right, let's talk technicals. And remember, guys, Kane is going to be here at 8:45. All right. Let me give you guys some links. Remember, I'll be live with Geof tomorrow. Folks, Geof really knows his stuff. He's not a big marketing guy. He's not a big talker, but when it comes to trading knowledge, he is fantastic. He is fantastic. I would say he knows about as much about commodities as T-Buzz or maybe even more. You know, he was the president of DTI. Well, let Boyd, let's get there. Let's get there, okay? So, let's talk about the stock market, shall we? Volatility is way above 20 and we have a gap. What do we want to start seeing? We want to start seeing by the way, folks, if you haven't given us two things. First of all, two things. I'm sharing my screen with you. If you don't have good quality, hit the gearbox, go to this and go to 1080. I broadcast in 1080. And if your if your internet speed is not fast enough, it'll default you to 720 or 480. You can force it to 1080. Okay. So switch yourself to 1080 so you could see myself in you could see me in high quality. It doesn't cost anything. Number two, how about a thumbs up? Let's see how many we have now. It helps drive traffic, and right now we have how many? We have 178. You guys can do better than that. How about some thumbs up? All right, guys. Now, what are we going to be watching for today? We're going to be watching for the 24. We're going to be watching for 25 level to be broken to see if we go back up to this level. There's major resistance here at 28. Major resistance here. All right. Right here. Right here. The low level we want to watch is going to be right here. It's going to be 2350 and the high level is 2450. Watch these levels. If we start breaking down and start coming in here, that'll give us a little bit of reprieve. So I want you guys to watch these levels. I want you to watch this level very closely today, okay? Very closely today. That's number one. Number two, I want you to keep an eye on Bitcoin because Bitcoin is still outperforming everything, and Bitcoin has not broken the low yet. If Bitcoin starts coming up instead of down, that may give technology a little. That may show us that institutional funds don't want to sell off. So keep your eye on Bitcoin. Look at the SPY. See how we broke the low right here? The structure is broken right here. You could see it, how we broke the structure. And on QQQ, we really broke the structure. Now, a lot of times what will happen is we will bottom out right here, shake us out, and start coming back up. It probably will not happen, but there's a chance that it will happen. Another thing that may happen is we may test this area before breaking lower. We like to test the breakdown level before going lower. So this level today is going to be very important. It's at 466. Keep an eye on 466. On the SPY, it's very important, folks, today to know whether we're going to close within this range or below this range. If we close underneath 550, we are sinking. If we close above 550, we are swimming. What is the Dow doing? Let's look at the Dow. And I hope to God you're writing these levels down. The Dow, we haven't broke those levels yet. The Dow, you want to keep an eye on the following level right here. There's right here. That level on the Dow is 414 or 41,400, depending on what you look at. Okay. Right here. Okay. Very, very, very important. Very, very, very important right here. Keep an eye on this level. If we close here today, that's good. If we close here, it's bad. If we hold on. If we close here, it's good. If we close here, it's bad. Capiche? Does anybody have a problem understanding what I'm showing you right now? Oh, look, we got 615 people here. People decided that this is important today, maybe because the market's breaking down. If you would have listened to me the last couple of weeks, you would have known this was coming because I drew a Picasso drawing for you. Are we going to close above this level, 466, or below this level? It's going to be very, very important. Let me make a prediction for you. If we close above this level, volatility will start coming back into this range. If we break down from this level, volatility will go higher. This is one of the reasons you want to watch volatility today. Okay. Keep volatility in mind. Keep cryptos in mind. Are we going to break lower? Are we going to come up? And remember, Mondays are rotational days. Monday are not strong trend days. And so far, we're seeing this based on the overnight data in Europe and futures. The stocks have not had a chance to trade in the US. If we're going to be bottoming out, you will know by looking at the VIX after the first hour of the day. You are not going to try to fade the market like Matt was trying to do in the futures program, trading zone. You're not going to try to fade the market when we're down like this. You're not going to try to fade the market when the market is like this. You look for pullbacks to go down with the market. You don't look for lows in these levels. Now, the Dow, the Nasdaq is equivalent to the Dow being down about 500 points. Notice they're down about the same amount. This is half the value of the Dow. So this is like the Dow being down about 400 or 500 points. Blue chips are much, much stronger right now. So you're going to keep your eye on RSP today. And you're going to keep an eye on whether RSP is starting to get stronger again, because RSP could go up, and RSP has not broken down here. The level on RSP, I hope to God you're writing this down. The level on RSP you're going to be looking at is 170, 138. Are we going to bounce off this level, or are we going to break down from this level? Is this helping you guys? Is this helping you guys? Let's talk momentum. What is momentum doing right now? This is technology, stocks above the 50-day moving average. What are we seeing on technology? This is 10 years, monthly chart. Is technology here or is technology down here? How worried do we have to be right now? Well, we may have a shakeout, but I think the worst is almost behind us. See that? 633 people. Look at that. How about consumer discretionary? Look where consumer discretionary is. Now, we can go lower. We can go lower, but I think we're getting close to the bottom. And also, I think within the next 3 weeks, we will find out what those tariffs will be. We'll find out what the mystery meat will be. And once we find out what the mystery meat will be, there will be no more price discovery of tariffs. And I won't be talking about them anymore because they'll be completely priced into the market. They're not priced into the market yet. Why? Well, because we don't know what they're going to be. We still have a Shanghai surprise. Markets cannot start healing and pricing things in when they don't know the full impact of what they're dealing with. Okay? Starting to. That's why I'm very, very skeptical we're going to go much lower because we broke the structure. I want to see us get back into this structure. And remember what I always told you, the lows are made not in the days before algos, we had higher lows. Now we have weaker lows shaking us out and markets coming back in. But I don't know if this is going to be a shakeout or not till a couple hours into the day after I see what Volt is doing, what Tick is doing, what ADD is doing, and what volatility is doing. And you guys are obviously going to be hanging on to every word I say in the Telegram channels today because I'm going to be giving you info based on what we are seeing right now. Anybody have any questions before we move on? Does anybody have any questions before we move on? Let me know. Hey, Kane, where are you?
I'm here. I didn't want to interrupt. You were
Where's your
some good
camera?
stuff. Oh, you can't see it?
No, I can't see you. Can you guys see Kane?
I can see me.
Oh, if you could see, okay, if you could, because this is only getting broadcast on YouTube and I can't see you. So straight,
Gotcha.
huh? Push the button right below Roger's chart. Can you guys see Kane? Can you guys see Kane on YouTube? Let me know if you guys can see Kane. Oh, you can. Suddenly, yes. Okay. All right. Well, as long as they, oh, there you are. Okay. So they can't see you, I guess. They could see you and I depending on who's talking. Okay. Got it. Got it.
Gotcha.
All right. All right. So Kane, I'm just about to, I knew you were going to be coming here and I knew you were going to be doing a class. So what I wanted to, so what I wanted to do is just finish up and give you the room. Okay.
Okay.
So
Sounds
you'll
good.
have the
Yeah.
room. But basically, what I'm telling folks is, I don't like what I'm seeing this morning, but I also am aware of, and please tell me what you think. This price data that we're seeing right now, this awful, god awful price data that we're seeing right now, mostly concentrated in technology, actually. It's being driven by overnight markets. I mean, China was weak, Europe was weak, Japan was weak. They're all down under over 1%. Futures are right now pricing in what they're showing us. We haven't opened yet, so we don't know what's going to happen here after we open. But what I'm telling folks is to keep an eye on this breakdown level, because this breakdown level is either going to solidify itself by bouncing here and keying off, or it's going to, and I gave the breakdown level on every asset, but I think what we're going to see is price opening weak and just slowly coming up, or price coming up, bouncing at this level and coming back down. What's your prognosis before I get into my momentum and stocks I'm looking at? Do you feel the same way? What's your feel on the next couple hours?
Yeah, I completely agree. We're definitely at a decision point. Right now, well, if you were to ask me right now, I'd be like, oh, it's kind of 50-50. And as to whether we're going to go up and bounce back down or we're just going to float up like this is the end. Right now, there's
Right.
definitely heightened fear. That volatility is index is pretty high, so it could just mean revert. When you have a low probability environment, then it warrants patience. And if you have a high probability environment, that's when you take action. So right now, if we're at a kind of a 50-50, then we have to have patience. We have to wait and see until our probabilities go higher, and then you can start making trades. So I think waiting and seeing for a couple hours is definitely the right way to go.
And remember, folks, it's Monday. Mondays usually are rotational days after big days like what we had the last couple of days. After big run days, Mondays are usually rotational days. People are asking me where they can watch this video. You guys can watch this video. You can go to my YouTube channel and go to the live tab and watch this video there. Okay. And remember, there's a delay in YouTube. There's about an 8-second delay in YouTube. So you may be seeing Kane's face and my face while one other person is talking. But anyway, I wanted you guys to have that information. Now, what did I want to do? What did I want to do? Now, let me talk about real quick about momentum levels. So right here, as you guys can see, we have only 23 stocks making 90-day highs. We now have 246 stocks. This is without ETFs making 90-day lows. Okay. So we do have some strong firepower to the downside, and I'd love to see this a little more neutral. What Kane and I are saying is, while we do have some strong downside and we don't want to fade this market, we do want to see the reaction that happens after the market opens, because the market will then be working on our agenda, not based on what happened in Europe, Asia, and Japan. So just be very, very mindful of that. When you have overnight futures driving price, that's just speculation based on what they think futures traders think is going to happen. And volume is not really big there either. And more importantly, Kane, check this out, Kane. This is tech stocks. This is 50-day moving average. Look at where we're at right now.
Wow, yeah.
Yeah, and this is consumer discretionary 50-day moving average. So while we may go down a little lower, I think the low is going to be somewhere around here, which means we're not here right now. We're here. So we're
Right,
getting fairly close to a bounce at these levels. We usually don't see too much below this. The What's negative is this. I'll show you what's negative. That's not there's more to it than that though. What's negative is this. If you look at the 200 day, and this is the big daddy right here, the 200 day, that just shows a bounce, what I just showed you right now. But this
right.
actually shows you the move. And here. So you see where we're at? We
Yep.
look like we can go a little lower here. Looks
Yeah.
like we can
So
go a little lower.
the implication would be that you could get a short-term bounce, maybe back up to the MA 200, or by the time we get there, that MA 50 is probably going to be pretty close to that MA 200,
Yeah,
and then we could go back down.
right. Right. Or we could just break this down and just kind of, but my point is I would say we're 75, 80% there.
Hmm.
I hope that gives you guys a good understanding of what I'm thinking. We're about 75, 80% there. We're not 100% there, but we're getting there. We're getting there. We're getting there. Okay. Now, what about sector strength? What sectors are leading? Which sectors are lagging? Obviously, technology is not where you want to be right now. You got consumer staples, you got energy. You do have consumer discretionary here, but look at communication, look at Russell 2000, look at QQQ, look at technology, look at semiconductors. I wouldn't put too much faith into consumer discretionary being here right now. And also look at how all over the place it is and with retail. So to me, this looks just like a lot of fragmentation. You definitely have speculative at the bottom, which is no good. But and you have more blue chip up here, but this is pretty spread out. So there's fragmentation. And when you have fragmentation on the way down, it usually means we haven't bottomed out yet. Because look where mid caps are and look where Russell is, okay? Look where Russell is, but look where financials are. Financials should be close to Russell because they're both very interest rate sensitive. Or how about home builders and industrial? You see, everything is and how about consumer discretionary and communication? Those are pretty close. So you have fragmentation. Do you guys think we will bounce all over for the rest of the year? I don't know yet, Chester. My job is to try to tell you a week or two in advance. I can't really, my market analysis isn't really great a week or two in advance because you can't predict fundamental events. How can I predict what Trump is going to do 2 weeks from now? See my point? If you tell me what he's going to do, I can probably give you a pretty good idea. But we don't know what he's going to do. We don't know what China's going to do. We don't know what Japan's going to do. There's a lot of stuff going around. You know, when Biden was president, there was nothing going on. It was really easy to predict the market. Right now, tell me, do you know what Trump is going to say in the next 2 hours? Because I sure as hell don't. I'm just being honest with you. And by the way, I was being dishonest with you 2 months ago, but you guys had a mutiny against me. Every time I would mention tariffs, oh, he's getting political. He's getting political. No, no, Trump is sticking his nose into financial markets. I'm not getting political. He's getting financial. Big difference. Okay. So let's talk about stocks and we'll give Kane the room, okay? Neither does Trump. I don't know. I think he has an agenda, a plan or something. I don't know what that plan is. Oh, now I could see you, Kane. I could see you on my second. Okay. Now I could see you perfectly. All right, folks. Here's my last CTA for today. Don't forget, join me and Geof tomorrow. It's going to be a lot of fun. Here's a link to Customer Service Live right here. And here's a link to my VIP room where I will be talking about market structure. Market structure. Something you guys need to understand, and options, whether they're too expensive to buy right now, whether we should be selling them. Yeah, I don't know. I don't want see that's getting political. I don't want to get political. I don't know what he's going to say or what he's not going to say. All I know is I don't know what he's going to say in the next couple of hours. If you guys do, God bless. I can't predict what he's going to say. If I knew what he was going to say, then I'd probably give you a really good understanding of what the market's going to do. But I can't predict what he's going to say. Well, there you guys know. Unknown tariffs outlook is not going to induce any institutional buying. No, it's not, Eagle Beagle. There's no. Well, I'll tell you what's not going to. I'll tell you what's causing lack of institutional buying right now. And that's an easy answer. This is the 200-day moving average. Institutions do not like to accumulate when we're below the 200-day moving average. Also, institutions don't like to accumulate when volatility there are program curbs based on volatility of assets. And when volatility of assets gets to a certain level, institutions stop accumulating. Now, what I just told you right now, most of you do not know. You just learned something completely new. But program buying and selling is also based on volatility levels. And if volatility levels get to a certain level, there are funds that only buy when institutional levels are below a certain level. And I can assure you right now, VIX is not below that level. Okay. And why do they do that? Why do you think they do that? Uncertainty, too much uncertainty, too much volatility, too much uncertainty. About 60% of funds buy based on volatility. Have you ever heard anyone teaching you that before? No, you have not. That's something you learn if you're an institutional trader. Kane knows this. I know this. You guys do not know this. But now you
Yeah,
do.
that's built into my morning payouts program actually
Oh,
for
I know it is,
exactly that
but
reason.
right, right. But they don't understand that institutions don't press the
Right.
red. They cut off. So, folks, there's two things preventing institutions from buying right now: the fact that we're below the 200-day moving average, and the fact that volatility right now is spiking. Institutions don't buy when volatility is spiking, and institutions don't buy when markets are below the 200-day moving average. And you just learned something new. Boy, you guys are really turning on Trump. You guys weren't this nasty a couple of weeks ago. Look at you guys. I'm just gonna completely stay out of there. I'm here to talk factual. I'm not gonna get into politics. All right, let's talk about stocks that are on my short list and my long list. I had no problem finding stocks for my short list today. Matter of fact, I could throw a stone and find stocks for my short list today. Do you guys want me to? Do you guys want me to give you my short list? It's going to be very easy. And also, when I find that many stocks on my short list, it makes me, what you want to do is you want to short stocks that have been going down before this route started going down. Okay? Like this stock. See how it's been going down before anything started? It's fundamentally weak. Macy's. Now, who in their world would shop at Macy's with this economy right now, right? I mean, terrible. How do you become a billionaire with a bankrupt business? By inheriting 100 million from your father. Didn't he inherit 100 million back when 100 million was like God knows how much? Yeah, because of his dad. I mean, don't you know the story? He inherited. He actually they did a survey of his net worth, and they said that he now has about half of the money that he has based on how much he acquired from his father, based on the value it was back then. Just FYI, Boyd. All right, let's continue. ALK. That's, by the way, a fact. That's not speculative. That's a fact. Look how long Alaskan Airlines have been going down for. They're at the 200-day moving average. Okay. CRM. Do you think investors want to buy right now software for their businesses? Microsoft announced that they're laying off, they're closing down data centers. Do you know how much money it costs to open up these data centers? Digital Realty Trust, folks, DLR. Salesforce, below our line here, we have a breakdown. Be careful because I want to see continuation of this. It's very easy today for this to just come right back up and be back in the range. And a lot of stocks are looking like that today. So be careful of all the stocks that are suddenly in a breakdown mode and give the market a couple of hours. If we still down 250 points on the QQQ a couple hours from now, then the odds are we want to see selling pressure from this day, from today, not from overnight. Okay. Mhm. Uh, all right. PayPal. PayPal. VFC. Why are we talking about volatility? Because it's relevant right now? Not Visa, not Visa, VFC. I'm just commenting about what people are saying. Boyd, I didn't say he lost the money his dad gave us. I never said that. I never said he lost the money his dad gave us. You got to listen to the words coming out of my mouth. I never said that he lost the money his dad gave him. VFC to a short side, MCHP. I've read several biographies that were ghost written by him. Interesting. Microchip. He's had an interesting life, I will say this. MCHP, DKNG. Breakdown. How do you like these shorts, Kane?
They look great.
All right. Helen, I'm not talking about Trump. Folks here are talking about Trump. I'm just commenting based on what folks are saying. Right here, Coinbase. That's my last short. Now, there's a bunch of other shorts, but I just gave you the big ones. Yeah, DLR, DLR, DLR. All right, let's talk long side. CNP. Not a lot of stocks to the long side, and you will notice they're all highly, highly defensive. CNP, Bro, Ed, WPM, gold stock. Notice so far we've had insurance, utilities, and gold. Insurance, utilities, and gold. Core, CBOE, choppy stock, but looks good. Coca-Cola. I got to look at Coca-Cola right now. I'm not even sure if it's good or not. No, it's got to break above this area. It's got to break above 7150. If it breaks above 7150, keep an eye on it today. It's got a great A line. It's above the VWAP. Keep an eye on Coca-Cola and MCK. Not MCK. McDonald's. What's McDonald's? MK. What's McDonald's ticker?
MCD.
MCD. Thank you. MCD. Brain fart. MCD. Like I don't know what McDonald's ticker was. Wait for the stock to trade above this level. Now, I want to show you guys something. All right. Folks, we don't need to talk about Trump here. We don't need to do that. So I want to show you guys something. I want to teach you guys something. And by the way, Tesla's down 6%. I want to show you guys something. These are my trades. These are my trades from last week in the pit. I want to show you guys something. We liquidated the stock. LVS. Let's look at LVS for a second. I want to show you guys something. I'm going to show you stock by stock. LVS. What is LVS doing? We got out of this short on Monday. What happened if you held on to it? The next stock was McDonald's. We went long and took an arm. We already showed it. The next one was ARM. I want to show you the kind of stocks we buy and sell for the pit. Look at ARM. It's down 4% this morning. The next one was Marvell. Every stock that's in my trading pit program is designed from the ground up to be a swing trading stock. If you would have held every one of my stocks in the pit overnight, you would have made 3 times as much money as if you would have day trading it. Now, why don't I hold them overnight? Because I like to day trade and I always have different stocks to choose from. But my point is, look at the type of stocks that I was picking last week. Look at the kind of stocks we were picking last week. Las Vegas Sands, McDonald's, ARM, Marvell, 2 chip stocks, a Las Vegas stock, and long. The only stock we went long was MCD. Folks, there are plenty of swing trade opportunities in the pit if you don't like to day trade. All right, Kane, on that note, I'll give you the floor. I'm just going to post the link to my VIP room today. Join me. I'm going to talk about market structure. And Kane, I'm going to let you have the floor. Let me go ahead and stop my screen share.
Awesome. Thank you. Thank you very much. All right.
And I'm going to go ahead and keep my Zoom. So when you're off, just close the Zoom and my Zoom will close as well. Okay.
Okay. Sounds
All
good.
right. Bye, guys. I'll see you at the office. I'm going to go to the office to play some trades and see Matt finally. See you guys later. Have a fantastic day. And we will get out of this. One way or the other, we'll get out of this. My advice is to listen to every word that Kane says, write down what he says, and pay close attention. He understands the bond market. The bond market is what's driving the stock market right now. He knows his stuff cold. Listen to what this man is saying, and I will talk to you guys later. All right? Bye, guys. Have a great day. Thank you,
See
Kane.
you,
I'll talk
Roger.
to you soon. Let me know how it goes, okay?
Will do. All right. Thank you. All right. Let me start sharing my screen. One of the things that Roger was just talking about was how there are some opportunities in the current market environment, but it can be a little bit difficult because where are we right now in the S&P 500? So sorry, I got distracted by the delay in YouTube. I was like, wait a second, it looked like Roger was talking. Okay, so right here in the S&P 500, we're at a deciding point, and that's why Roger talked about and I talked about we need to wait a couple of hours to see if we're going to bounce off of this or if we're going to break down further. Or there's the third possibility of, hey, we might just chop sideways for a little bit before we get directional again. So that makes it a little bit difficult to gauge. It makes it a little bit difficult to trade directionally. And Roger he ended this with giving us some suggestions saying that it's a little hard for us to find stocks to the upside. And then most of them, we had to wait a little bit. And then for the stocks to the downside, a lot of them have already broken down so much. So we needed to wait for a little bit of a pullback before going into it. So what do you do at this point? The other thing is that we talked about volatility. Roger said that when volatility is elevated, a lot of institutions stop directional programs. They stop buying directionally, they stop selling directionally. Why is that? Well, more importantly is that it actually happens. So when we have a high volatility environment, suddenly what happens is that most of the time it stops being directional. And so you get this large volatility chop sideways like we do have right here. Large volatility chop sideways like we have right here. This is lower volatility chop sideways, but so this is more representative of what we were talking about. So how do we trade in those environments? And you say, well, if institutions aren't trading, then maybe we shouldn't trade in those environments. But it's a lot harder for us to sit on our hands and do nothing for extended periods of time than it is for an institution. An institution, they've got all year to build their performance, and they can wait things out a little bit more than us. If we make zero money for 3 months, 5 months, just because we're just sitting in cash, that is a lot bigger deal for us as a retailer than it is for an institutional trade. But what people need to understand is that there's many types of institutions. There are retirement accounts, there's insurance accounts, there's mutual funds. Those are the ones that are usually the most restrictive. And they're large pools of slow moving money. But there's another piece of Wall Street that moves faster. Certain hedge funds, certain discretionary funds, certain for sure proprietary funds. So they will trade through this. But what do they do? What does Warren Buffett do when we see this? Do you think he's just sitting there on his hands doing absolutely nothing, waiting for value? That's what he says he does. But he actually trades. He actually starts trading certain options strategies. So what we need is the ability to take advantage of other phenomena in the market other than directional price movement. And if all you have is buying a call or buying a put in the options market, then all you can do is take advantage of directional movement. And high volatility chop is your worst enemy, because today you look amazing and tomorrow looks like you're losing your entire house. So we want to be able to build up that toolbox. And a lot of people have been asking me about trading in this type of environment. And that's why I decided to kick off my first ever boot camp. So let me see what you guys are saying. Buffett, OXY, buying OXY. Buffett is buying OXY. Maybe. So first of all, everything that we're going to talk about, I'm going to share with you. We make no futures earning claims. You might lose money, and you got to trade out your own risk. So look at the Trading Pub homepage if you need more information. And we got to be real. No matter what we do, there will always be losers. There's no such thing as winning all the time. It doesn't matter how great your system is, how much experience you have, how great your information is. There will be times where we take losers. So the whole purpose of research, the whole purpose of building more tools is getting more education and giving you an edge. So if you can't handle a losing trade, you shouldn't trade with real money, and losses can and have occurred, and they will continue to occur. However, one of the absolute best ways to reduce your risk in the market is to get education. And there's a reason why we emphasize giving our children an education. It's because it reduces their risk of being jobless. And there's a reason why we send everyone to driving school before they get their driver's license, because it's a way to reduce the risk of accidents on the road. And there's a reason why we get pilots' licenses for our airplane pilots, our helicopter pilots, because the education reduces the risk when they're doing those activities. Same thing in the markets. Education is the best way to minimize and reduce the risk that you have in the markets. So I want to start out today by asking you a very important question. And that's, if you're a handyman and you look in your toolbox and all you see is a hammer. You don't have a drill, you don't have a level, you don't have a saw, no screws, no nail. All you've got is that hammer. How many things do you think you could get done around the house? How many home projects do you think you could accomplish with just a hammer? Would it be a lot of projects, or would it be not too many? So think about it, because the answer will determine how you spend the next, I don't think it will take 20 minutes but in today's class. But so let me see. Just give me a couple answers here. I know there's a delay, so I'll wait a few seconds to see what you guys are saying. You think it's a lot of things we could get done, or just very little? You need your learner's permit and to be in the front row. That's funny. Mutual funds never seem to go into cash, at least the ones that, they should be. I mean, there won't be 100% cash, but their cash position will fluctuate on how much of their cash is actually invested will fluctuate. Little, all you could do is remove a window pane, maybe a little demolition, right? Just very little. A few, just very little. Okay. So by no surprise, most of you are saying very, very little, right? And that's exactly right. So just like a handyman who's limited to the number of projects that you can do, if any at all, other than a few demolition projects. With just a hammer, then you're not going to get much done. And unfortunately, that's how many traders spend their time investing. Like I was talking about a little bit earlier. If all you have is the simple call and simple put, then you are stuck trading direction. Now, imagine that you give that same handyman a drill, a saw, a level, screws, entire tool bag full of tools. The number of projects he can do is probably increased at least by 3 to 5 times. If he can only do 1 or 2 projects before, he can probably do a few dozen projects if you give him the right tools and enough tools. So it's probably more than 3 to 5 times. So that's what I want to do for you here. Instead of just handing you physical tools like a handyman, I want to hand you one of the very best methods that I know of that's designed to help supplement your earnings and your profits inside of a stock market. And they're methods that any trader can apply. And a lot of these setups, you'll learn that you get to choose. The power of education is choice. You have more options. And you can choose to make trades that are as low as $20. You can choose to target your gains and design your trade so that you'll make 15% profit potential, or sometimes even all the way up to 500% profit potential. And it can be used in a tiny account, because if we can design a trade to be only $20, you can definitely use it in a small, tiny account, or you can use them in a large $1 million account as well. Ever since the election, markets have been volatile. We all know that. Uncertainty is definitely name of the game right now, especially today, and with the VIX spiking up to about 25. We've got tariffs, inflation, global tensions, earnings. It's been pretty wild. Overall, we saw a strong rally in the market that took us to a new high, only to see the aggressive sell-off over the last several weeks. And most traders, they've been getting smoked if they're just doing simple calls and puts, unless they went to an extremely short time frame. Now, even buy and hold investors are seeing red in their portfolios right now. And that's why you see institutions, they're below the MA200. They're not going to be putting a lot of money to work right now. So right now is the perfect time for you to learn this method, and it's designed to start supplementing your income. And any investor who can start adding this to their trading will be able to find setups that cost as low as $20 and be able to target any gains anywhere from 15 to 50 or 500%. So when I was managing money for a $1.7 trillion firm, I was responsible for trading billions of dollars per day. And I learned very quickly that Wall Street definitely has zero interest in sharing their secrets with everyday folks. It's probably one of the most secretive industries that I know of, because everyone wants to guard their method of making money. They only really want to make money for themselves. And part of the way that they can do that is to not let other people know how they're making that money. The method that I plan to share with you is one of their absolute favorite strategies, one of the go-to methods in Wall Street, other than the ones that can't do it, like the big insurance companies. They're not allowed to do certain things, but actually they are allowed to do this, which is kind of interesting, right? So it's something that I did pick up in my years at PIMCO. So think about Warren Buffett. He's worth $163 billion, which is an incredible amount. And publicly, he always talks about, what do you think of when you think of Warren Buffett? What's his advice? Buy value stocks. Buy stocks when they're undervalued. He calls value investing. Ignore the shiny object syndrome. Don't trade in and out. Just buy and hold, and buy when things are super valuable or super undervalued. But privately, he's also making billions of dollars using variations of the exact same method that we'll be talking about. As you can imagine, with that much money on the table, Wall Street is in no rush to let the secret out. Researchers for NASDAQ put it this way: Wall Street works very hard to keep its most powerful income strategies out of the hands of regular investors. Now, a lot of folks, actually, interesting story, interesting side note, not a lot of people who come from an institutional background leave. And those who leave, very few of them go into doing what I do and what Roger does, is sharing our knowledge with the public. And some traders, they get locked into battles where where you'll get threatened with your money and legally to prevent you from quitting. They hang on to their people very, very, very closely. So there's all sorts of weird tricks and things that they do in order to try to keep you in and keep you from going, because number one, you're a huge asset to them. You're making them billions of dollars. And then number two, they don't want you to share all this information out the door. So I kind of got around that by not working in the finance industry for a little while. So a lot of folks now, what they do is they're turning to the stock market to catch up with their retirement or supplement their income with active trading. Times are getting a little bit tough, but ever since COVID, we saw this phenomenon where there's just a huge number of people who piled into the markets to try to catch up or to try to make some money while they were stuck at home. And a lot of people lost their jobs at that time. So ever since then, the stock market has been a go-to place to try to make up for lost retirement savings or to supplement their income. And I think that's a really great idea. I'm in the markets, so of course I think that's a great idea. Unfortunately, though, most people have a dead wrong method, especially with Wall Street keeping their most powerful income structure, their income strategies to themselves. Because contrary to what most people think about the stock market, it actually doesn't move that much. And I think we can see that in recent times, ever since the election, you can see that we didn't really move all that much since November. I mean, we were here just before the election. Where are we right now? Not that much different than where we were. So there wasn't a lot of directional movement. It was mostly this chop sideways. Okay, so we can say that is chop. That's chop right there. What else is chop? This is chop right here. Until we break out of this box, which we had the potential of today, this morning, that this is chop. So really, from November all the way until now, the only directional movement was these few weeks right here, 2 or 3 weeks. So the market really isn't moving up and down as much as people think. So that's another way of looking at this. Take a look at this graph right here. What you're looking at is the S&P 500 movement every day for the past 10 years plotted onto a chart, and a movement outside of these lines. So anything to the left and right of these black lines right here is where the market moved 1% or more in that day. But when you look in the green box right here, that's where the S&P moved less than 1% in a single day. In other words, it just didn't really move that much. And as you can gather from this chart, it's far more likely that the S&P 500 stays within a 1% range on any given day than it is to make an outsized move. And most of the time, markets, just like I showed you on what happened in the last several months, the markets just don't move that much from day to day. And as a matter of fact, it stays within a 1% range more than 75% of the time over the last 10 years. Now, here's the problem that most people face. If you just trade simple calls and puts, you really do need that market to move more than 1%. Or at the very least, you need to be able to find relatively strong stocks that are moving more than the market is. Because if the market is not going to move 1%, then you need to be able to find those relatively strong or weak stocks that do move more than 1%. And that just rarely happens. The market doesn't move more than 1% from day to day all that often, and even single stocks don't do that very often. So investors who turn towards the stock market is the right idea, but almost all of them are learning a dead wrong approach if they want a chance of succeeding, especially if you're a beginner. It's actually a lot harder to trade directionally than it is to trade non-directionally. So I'm sure just about everyone has traded options and watched them melt away because the market didn't move enough. Even if you got the direction right, that time decay really eats away at your position. And by the time the market has moved, then you might not have any time value left and your option goes down, or at the very least, you lose money, if not lose all the way. If you don't hang on all the way to expiration, then you recoup some of it, but you've still lost money. So you're not necessarily picking bad trades. It's just that the directional trading is doomed because there isn't enough movement. And it's not just me saying that. Studies have shown that it's really hard to actively trade successfully because of this very reason. So one CNBC report showed that it was virtually impossible for individuals to day trade for a living. We find that 97% of individuals lose money because most people don't know how to pick directional stocks, even on a day trading basis. So here's the key. Instead of chasing market direction, buying options, and hoping for the best, the key is to flip that lack of direction from day to day on its head. And remember, studies show that active traders are losing from around 90% of the time. And it's no surprise because they're buying those short-term directional options inside a market that doesn't have enough direction. Over time, that's a recipe for disaster. We're saying that my husband has two tools, a hammer for inside and a lawnmower for outside. He obviously doesn't get much done. That's hilarious. Yeah. Okay. Time decay. Yeah, time decay. Options traded for 7. That's right. That's right. Yeah, it happens to you all the time, right? But what if you could trade it in a way that relies on the market not making a huge move like the data shows is so likely? And what if you could turn that time decay to your advantage? So that's the exact opposite scenario of what just about every trader is applying. And actually, if you think about it, that's how the market maker works. So if I pull up my option chain over here, if I can get it to move, here we go. So what you see here is, what is this? What is the market maker move? What are these implied volatilities? What are they? Those are where the market maker is placing the bid ask on every single one of these strikes based on where they believe the market is going to move, the most likely move that the market is going to make. And if we stay within that range, what happens? The market maker makes money. Even if you bought this and it moved directionally, well, if the SPY doesn't move 5 points by the time this expires, then the person who bought this doesn't make any money, which means that the market maker made money. So they're counting on not a huge movement and they make their money. So that's exactly what we're talking about right here. We're counting on not a huge movement and we would make money. So we're going to adopt strategies of one of the biggest players in Wall Street, at least in terms of the options market, and adopt the similar types of strategies that they have in order to consistently make money. And do you think the market maker makes money most of the time? Probably. Otherwise, they wouldn't be market makers anymore. It's like the casino. The casino makes money most of the time. And at the end of the year, it's almost impossible for the casino to not have been profitable. Same thing for the market maker. So if we can start adapting the strategies of the market makers and other players like the market makers in the markets, then we're probably going to have very similar results. So that would turn this reality, instead of it working against you, it turns it into a gold mine. So that's exactly what the method that I'm going to share with you is all about. It's a method that any investor can add to their trading. It just adds more tools to your toolbox, and you can start creating setups that cost as low as $20, all while targeting gains anywhere from 15 all the way up to 500%. So I've already used this phenomena in my morning payouts program and a twist on it, and it's already a nice 75% win rate. And that's over $4,300 in profit in just a month's time. And that's including winners and losers. So the best part is this is done with a $5,000 investment in every single one of these. So that means the account has doubled, almost doubled in size in that time. So here's the thing. I've hinted at other methods of generating income, like the morning payout program, in my videos, inside Roger's VIP trade room, inside my own master classes. And it's generated a lot of emails. People are emailing me pretty often. Almost every day I'm getting emails. Hey, can you teach more about this? I want to learn more about this. And the moral of story is, yeah, people, you want more than just your hammer inside your toolbox. So I can give you more information and more red meat across my free content and newsletters and videos, but that's sort of like trying to pick up everything that you need through a tiny little trickle source. And going to YouTube, like how many of you before you landed on Roger went to YouTube, and for years and years and years you're trying to pick up information by all these people on YouTube. Number one, are they the right source of information? And number two, even if they are a good source of information, how much are you really going to pick up? It takes you many years even if they're giving you great content, you're not getting everything distilled down to you're getting like micro little bites at a time. You're not getting the entire picture all in one sitting. So I do plan on continuing to give value and giving you good information in all of the mediums that I have. But many of you have asked me if there's a way to get a more hands-on experience and to work more closely with me. So here's what I put together. Since the markets have been so choppy, I believe they'll continue for the months ahead. I want to hand you the very best methods that are designed to start supplementing your income in a very hands-on way, and setups that anyone can take as low as $20, all while targeting gains from 15 all the way up to 500%. And so for the very first time, I want to level up your skills with my own Wealth Builders Bootcamp. So you get all of the meat all in one place. So it'll be a 3-day virtual bootcamp. I'm going to take you completely behind the scenes on the best income producing methods that I know, in which you'll get essentially a look inside my brain and a look inside of Wall Street. You can ask me anything directly. You can see how I construct trades on my own accounts and how you can trade them for yourself as well. I'll dig into why these setups can cost as low as $20 and how we can target 15 to 500% returns with them. And it'll be all new material. It's not going to be something that you've seen in any of my other programs. It's just going to be a completely new material. So to be transparent, this bootcamp is designed for two types of people: someone who is buy and hold investing or trading very simple calls and puts, but is ready to take their options trading to the next level and be able to take advantage of more opportunities in the markets. If that's you, this bootcamp is made for you, and you won't have to unlearn any bad tips or tactics that you've learned in the past from other traders. The second is someone who's already trading beyond simple calls and puts, and they're dabbling into some more in-depth option strategies, but they're eager to learn more. They want the secrets and the nuances, the things that people like Warren Buffett and Tony Saliba know, but the retail trader doesn't, and that makes the difference. Those little details can determine the difference between success and failure. So if that's you, then this bootcamp is also perfect for you. And I've set aside 3 days to cover all the materials I've prepared. This is going to take forever for me to tell you all about it. So I'll just say we go super in depth. We go into why the strategy works, the advantages, the considerations, the different conditions in markets to use certain strategies. How do we tweak the strategies to either give us a really high probability of winning or unlock 100%, 200%, all the way up to 500% returns? And how do we balance those things? How do we balance the probability and the risk to reward? I give you a calculator tool and management. This is the piece that most people are missing. We know that there's 4 pieces to trading. There's the trade idea, there's the timing, there's the execution of it, and there's the management of it. And guess what? Most people don't know when to exit. They don't know how to manage their trades, and that's where they're failing. So you can get the timing, maybe, right? That's another place that people struggle with. You can get the trade idea or the execution. Maybe I know that I only have a hammer, so I'm only going to do a call or a put. But so how do I manage that? So we're going to go into the management, because that's where, if you're a professional trader, if you're an institutional trader, where do you spend all your time? 90+% of your time. When I was managing for that 1.7 trillion firm, I was trading hundreds of billions of dollars a day. What do you think I spent most of my time doing? Was it placing trades? Was it on my phone saying, hey, yeah, offer me this, bid me this? No, 90% of my time was looking at my portfolio positions and managing them and manage them. So if I'm spending 90% of my time as a professional portfolio manager on the management, so my question is, as a retail trader, are you spending 90% of your time managing your positions? Or are you spending 90% of your time looking at a chart and saying, oh, is this going to break out? Is it going to pull back? Is it going to, which one are you doing? So most retail traders don't have the management down. So we're definitely going to go over management in the workshop as well. This workshop will not be about butterfly spreads. No, we're not going to jump from simple calls and puts straight to butterflies. So this one will not include butterfly spreads. I'm also going to give you guys a exclusive strategy breakdown, a PDF and I'm also going to hand you a system. So sort of like Roger has his A-line system. I have my morning payout programs system. I'm going to hand you a brand new system that you've never seen before to use with the new tools that you've had. It's sort of like, hey, I'm going to give you a bunch of tools. Great, I know how to use a bunch of tools. What do I do with them? I know how to use them, but well, why don't I give you some blueprints as well? Why don't I give you some projects that are really cool projects that you could build with those tools? So I'm not just going to give you the tools inside the options markets. I'm also going to give you a system that you can trade utilizing those tools. It'll include looking at seasonal market trends and integrating other tools to help you evaluate your trades. Since this is my first ever boot camp that I've ever done, the original idea that Roger had for me was to offer it at $5,000 because that's what he charged for his very first boot camp, and it had this level of valuable information. But I told him, no, that's too much. Given what we're seeing in the markets, given what we're seeing in the economy, it's just too much to ask for right now. But prices are still high. We still have inflation. There's a lot of investors who have lost money in the recent markets in just the last few weeks. And so I want everyone to be able to attend this. So we're not going to charge $5,000. So if you're brand new to trading and you only have $1,000 account, if you're an active day trader with 25K or more, or you're a buy and hold investor and you've got millions in your account, I want you to be able to take advantage of this. So it's not going to be 5,000. It's not going to be even half of that at 2,500. For the first 397 traders in the door, we can grab that bootcamp pass for just $397. I want to make it super easy for people to attend and super easy for you to make your money back. I'm so confident that you're going to love this course. I'm going to throw in the Wealth Builder Bootcamp guarantee. And that means that anyone who goes through all 3 sessions and by the end of those 3 sessions feels like they did not get their money's worth, I simply call the team, request a refund, and we will send back every penny that you spent on the bootcamp. I am that confident. Education is something that I'm no slouch at. I have tons of valuable information from an insider's perspective. You will not be wanting if you go through the bootcamp. I will share with you things that you never knew before. So the question is, are you ready? So if you want to grab your virtual ticket, you can go to tradingpub.com/bootcamp or call our success team at 904-706-3539. Our team of 13 customer success reps are standing by on the phone to help you. And so be one of the first 397. Take advantage of that $397 price point. Go to tradingpub.com/bootcamp or call 904-706-3539. I can't wait. Now let's answer some frequently asked questions. One, when are the sessions? There will be over 3 days. It's going to be at 10 a.m. Eastern each of the days, and it'll be next week. So April 7th, 8th, and 9th, Monday, Tuesday, Wednesday, 10 a.m. Eastern. If you can't make it to one or any of the sessions, will there be replays? Absolutely. Every session will absolutely be recorded. They'll be posted in your members area for you to consume on your own rate, on your own time. I'm a big believer in what's called spaced repetition. That means repeating the same material over and over again so you can catch new nuances and learn at a deeper level. Most people have an attitude of like, well, I've already watched this before. Oh, it's so boring. Why would I want to repeat it again? I already got the information. And the answer is you didn't. I promise you, even if you have a perfect recall memory like Roger does, the first time through, you didn't catch absolute everything. So the second time through, third time through, fifth time through, 10th time through, you will catch things that you did not catch before. And I liken it to listening to your favorite song. You don't listen to your favorite song just once. You don't watch your favorite movie just once. You don't go, oh my God, why would I listen to that song again? I've already heard it once. No, you go, hey, I love that song. Let me listen to it again. So these sessions, I'm going to put so much information into them. You're going to love them and want to listen to them again because there's going to be chock full of information. So yes, there will be replays. They will be put in a members area for you. What will I be covering in each session? Well, there's a big list of stuff. I don't want to go through all the little details again, but it will be very, very complete. You will get a complete system, complete trading plan, all the details you could possibly want to know about the different types of option strategies and exactly how to use them, and even the blueprint, the system to use them in. So you'll get that PDF breakdown showing you absolutely everything for that system. And is there a prerequisite knowledge or experience required to join the bootcamp? No, absolutely not. This is for people who just want to trade beyond the simple calls and puts. Anyone who's already trading options but eager for more, or looking to see, hey, why, I've learned about this before, but they don't seem to work for me. And, I'm only winning half the time, or why am I not seeing the results that I purportedly could get with them? This is exactly for you, because I'm going to give you all the nuances and secrets that normally are not taught. Okay. How long will each session be? There will be 1 to 2 hours. 1 to 2 hours. I would say closer to 2 hour range, based on how much content that I want to deliver to you guys. And of course, if we don't finish in the 3 sessions, I'll add more sessions. I'm not going to limit myself and say, oh, too bad, we only scheduled 6 hours and you didn't get all the information. No. If we need more time, then I will add more time so you guys get all the complete information. What are the expected outcomes after completing the bootcamp? Well, by the end of bootcamp, you should be able to be equipped to apply the options methods that I teach in your own trading to make better and informed trading decisions. So you should be able to take advantage of these setups for as low as $20 and target gains anywhere from 15 to 500%. And the other cool thing that you should be able to do is that, hey, maybe you rely on a guru for the trade idea and the timing, but you rely on yourself for the execution. So instead of saying, hey, the guru said buy this call at this expiration and this strike, you can go, oh, you know what? I have more tools in my tool belt now. I have more tools in my toolbox. I can design a trade that utilizes the same idea, the same timing, and design a trade that is only $20 because I have a smaller account. Or I have a huge account and I want to design a trade that costs me $5,000. Great. Or, that this guru, he didn't give me a target, so I don't know exactly what my profit potential is. It could be 10%, it could be 30%. On average, what I get from this guru in this program, it's like a 40% return. Okay, well, what if I want to boost that? What if I want to take that same idea and the same timing and say, you know what, I'd rather make 100% than the normal 30 or 40% that the guru targets? Well, you could do that. So that's the goal of this bootcamp, is to put the tools in your tool belt so that you can decide in your own trades and get the return or the probability that you're looking for yourself. What size account do you need to apply the methods? It could be anywhere as a $1,000 account, $10 million account. The trade setups could cost as low as $20. So if $20 of risk, whatever account size that is to you, then you could start with that account size. Okay, so just remember, if you're one of the first 397 traders You get it for $397. So you can take advantage of that at tradingpub.com/bootcamp or call 904-706-3539. Let me see what else you guys are asking. Let's see. This is a boot camp. This is a boot camp, so it is not included in any of my services. This is education, where you will have time with me to be able to ask all of your questions and go over all the nuances that you want to see. So it's personal time with me inside of a boot camp where I'm training you guys. So it's not part of any other program. It's not part of morning payout. It's not part of weekend trader. It's not part of Gamma Pockets. This is a boot camp. What bubble will it be under in one click? It'll be called, it should be called Wealth Builders Bootcamp. Sometimes they change the name, but I believe it'll be Wealth Builders Bootcamp. Looking forward to learning more from you. Thank you. Thank you. I'm looking forward to teaching and sharing more. You know, one of my goals is to give Wall Street secrets, Wall Street strategies, Wall Street results to the retail trader. So I love these education sessions. I love the boot camps. And I lost the chat. Institutions rely on these strategies. Absolutely, absolutely. Warren Buffett, Tony Saliba, very famously says he will only trade this way. There is a day trades or swing trades. You can use it on either. It can be done on any time frame. Folks, the biggest advantage to this bootcamp class is you get all of Kane's expertise. And thank you, RJ. Thank you very much. Will there be any alerts for the purchase? No, this is just education, although inside this education, I am including a complete system. So I'm not going to alert you off of that system, but you will learn the complete system and you'll be able to take trades for yourself. Although if there's enough demand, I suppose I could create an alert service out of it. Well, we can decide that together inside the bootcamp. If all of you like, oh, this is amazing, but Kane, I'd rather you alert me, and then I can take the setups, then I can do that too. But we'll see if there's demand for that inside the workshop. Oh, it's already in your one click. Okay, great. What's the institutional return percent? Now, that's a tricky question. So I purposely don't have any slides on anything on the win rate or the return, because what did I promise you guys? That you can design your own trades for anywhere from 15 to 500%. I guess that wasn't the best over here. So how can I design it so that I can return 15% or 100% or 500% or anything in between? And how can I design it so that I have a really high probability trade, or maybe I'm willing to take a lower probability trade for a 200 or 300% profit potential? So I can't give you a win rate or a return, or what does Wall Street normally get off of this, because everyone's designing it based on their own purposes. So what I can tell you though is that if I have a portfolio that needs a lot of safety, and say, hey, there's no wiggle room here. We just need super safe trades. Why? Because it's people's retirements, it's insurance, whatever. Then I'm going to be chasing those really high probability trade setups. And if I'm like, hey, this is discretionary, I work for a VC, I'm venture capital style. Okay, great. Let's chase after 400 or 500%. And not care if we only win maybe 30 or 40% of the time. Okay, so we can't give you the exact win rate or the return, because everyone's going to have a different utilization or strategy for their specific portfolio, or even for a specific trade. Okay, is it a lifetime access course? Yes. Once you're inside the bootcamp, then you will have access to the recordings for life. Yes. I'm working full time, so knowledge is great, but I do not have a lot of time to trade and manage my accounts. Perfect. I will teach you mastering management. And if you're in that situation where you work full time, I will teach you how to manage these things overnight. So you don't have to be in the markets during the day watching over these things. We can teach you how to manage them just in your own time after work hours, after market hours. Yeah. Okay, I think that's about it in terms of, at least that's all the questions that I can see in the chat so far. So I'm super excited about this. This is my first boot camp. It is going to get a ton of, well, it's already getting a ton of my attention and my work. I'm putting a lot of my weekends basically are occupied completely with building this out, making sure that I have every nuance and every detail for you guys. And of course, if I happen to miss something or don't think of a question that you guys might ask, yeah, you're in there live with me. So you can ask the question and I can teach you guys about that during the workshop. So be one of first 397 people in the door. You will get that special $397 price, trainingpub.com/bootcamp, or call 904-706-3539. Thanks for spending your time with me today. I'm super excited about the class. I'm super excited to see you in the class. So I'll just leave it there. And if you have more questions, you can always call the customer support or email customer support, or you can email me at kane@investpub.com. All right, guys. Thanks, guys. I will. You want a live workshop? We'll definitely put one in the works. Not this time, but there will be a live workshop in the future. Yes. All right. Goes. Okay, guys. Have a wonderful rest of your day, and I'll hopefully see you in that workshop.